Are you driving a commercial truck in Texas and think you're fully covered? Think again. One missed detail in your insurance could cost you everything. Today, we're diving into the world of commercial trucking insurance in Texas. What it covers, how much it costs, what the law requires, and how to protect your business from going under in just one accident. Whether you're an owner-operator, a small fleet owner, or leasing your truck through a company, this is the guide you wish someone handed you before you hit the road. So keep watching, because later in this video, I'll break down the biggest mistake truckers make when filing a claim, and how to avoid it. Let's hit the gas. Let me tell you a quick story. Tony, a long-haul driver from Dallas, had been running routes for over a decade without a major accident. One rainy day heading south on I-35, a car spun out in front of him. He slammed the brakes, jackknifed, and hit a guardrail. Thankfully, no one was hurt. But when he called his insurance company, they denied part of his claim. Why? Turns out his insurance policy didn't cover the type of cargo he was hauling that day. And just like that, Tony was out $38,000 in damages. Don't let that happen to you. Commercial truck insurance is like regular auto insurance, but built for the big leagues. It covers your truck, your cargo, your liability if someone is hurt, and sometimes even your legal fees if things go to court. It's required by law if you operate any truck for business, but the type and amount of insurance you need depends on what kind of truck you drive, what you're hauling, and whether you cross state lines. Let's break this down like you're sitting at dinner with a pen and napkin. If your truck operates only in Texas, that's called intrastate commerce. Here's what the state says you must carry. Under 26,000 pounds and household goods only, $300,000 minimum liability. Over 26,000 pounds and household goods only, $500,000 minimum liability. Oil and transport, $1 million. And hazardous materials, $5 million. If you're crossing state lines, interstate trucking, then you're playing by federal rules too. General freight, $750,000 minimum if your vehicle is over 10,000 pounds. Hazmat, again, $5 million. The difference is huge, right? Let's decode some of the lingo so you're not getting bamboozled by your agent. Primary liability insurance. This covers other people's injuries and property damage if you cause an accident. This is required by law. Physical damage coverage. This pays for repairs to your own truck after a crash, regardless of who caused it. Optional, but essential if you're financing or leasing. Cargo insurance. This covers the goods you haul. Depending on the value of your load, some brokers won't let you haul for them unless you carry a certain amount, like over $100,000, for example. Bobtail or non-trucking liability. This covers your truck when you're driving it without a trailer or between jobs. Trailer interchange. If you're swapping trailers under a contract, this protects you in case something happens to the trailer. General liability. This protects your business from lawsuits not directly related to trucking accidents. Think a customer slipping at your yard. Here's where things get tricky. If you're an employee for a big company, they usually cover you under their umbrella policy. But if you're an owner-operator or an independent contractor, you're flying solo. This means you're responsible for getting primary liability, physical damage, bobtail, and sometimes cargo insurance. And here's the kicker. Even if you're leased on with a company, they might only cover you part of the time. So check your contract twice. Okay, so what's the damage to your wallet? On average, commercial truck insurance can run anywhere from $8,000 to $15,000 per year per truck. Some pay more, some pay less. It all depends on your driving record. One speeding ticket can bump up your rates, your age and experience. Newer drivers pay more, the type of cargo. Hazmat equals higher cost. Radius of operation. Long haul costs more than local. Truck value. Newer rigs equals higher premiums. Claims history. More claims equals higher risk. Want to save? Pay in full. Bundle with property insurance. Install dash cams. Insurance companies love that stuff. Let's go back to our guy Tony. Tony had physical damage and liability, but his cargo insurance only covered up to $50,000. He was hauling $125,000 worth of custom medical equipment when the accident happened. The insurer paid $50K, but the rest came out of his pocket. He thought he was saving $300 a year on premiums. It cost him $75,000. That's why it pays to ask your broker hard questions. What exactly is covered? What's the deductible? What about theft, vandalism, hail? Are rentals covered if mine breaks down? You know what kills most claims? Bad documentation. If you're ever in an accident, here's what you do. Call 911. Even if it seems minor, you need that police report. Take photos, all angles, your truck, their car, the road, skid marks, signs. Get witness info, names, and phone numbers. Go to the doctor. Some injuries show up later. Get checked. Call a lawyer if needed, especially if the cargo or damages are high. Not all insurance is created equal. Look for fast claims processing, Texas-based support, strong reviews from other drivers, and experience with commercial fleets. Some good providers in Texas include Progressive Commercial, Great West, and Reliance Partners. But shop around. Use brokers who specialize in trucking, not your cousin who does car and home policies. Look, trucking in Texas is no joke. It's one of the busiest freight states in the US, and more than 15% of deadly transportation accidents in the country happen on Texas roads. Don't gamble with weak insurance. Don't assume you're protected just because someone hands you a policy. Understand your coverage. Ask questions. Update your policy every year. And if something feels off, call a Texas truck insurance expert or attorney, because one accident can end it all.